One, it had to have really good KPIs. Being an accountant in my past life, I wanted to make sure I was able to make decisions based on the data, not based on someone's opinion about how the business was going. Second, it had to be one system that everyone in my company could use. I didn't like the idea of, for example, using Podio and then having all these different integrations. That I just hated that idea. So that was the no-go. And then the third one, it had to be super simple to use. So I didn't find anything. So I just hired a couple of developers to create something for myself.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 441. My guest today is a real estate investor with over 700 closed deals under his belt. He primarily invests in single-family homes, and his superpower is being able to manage his entire real estate business and property management business by spending only 1 hour or less per day. Sharad Mehta is the founder and CEO at Max Properties and REsimpli. He owns over 50 free and clear rental properties. He flips just about that many per year from out of state, and he owns a property management company and is skilled at hiring team members to build a scalable real estate investing business. And today we're going to find out how he does it. Sharad, thanks so much for coming on the show today.
Brian, thank you so much for having me on the show. I'm super excited to talk real estate with you.
Tell us a little bit about yourself. I mean, how did you get started investing in real estate? And then we'll kind of take it from there.
I used to be an accountant. I bought my first duplex in August of 2010. I still own that property. I think for me, when I was working a full-time job, the biggest thing I realized was I needed freedom of time and money. So I wanted to do whatever I could to just have freedom of time and money. I tried investing in stocks and bonds, just don't have the patience, for all the volatility. Wanted to be a full-time poker player at one point, absolutely suck at playing poker, and then came across real estate, and it just seemed like, something that I could relate to. Long time and coming from India, like culturally, real estate is a big part of investment people do. So it just made all the sense. And then I started investing in real estate, bought my first property in August 2010, a duplex, then bought a 3-unit a month after, and then just kind of scaled it from there.
Take us to the start there. Like you said your first property was a duplex back in 2010?
Correct.
What was your experience with that? And how did that kind of create a foundation for the rest of the portfolio you ended up building?
I wanted, the idea of passive income was very, very appealing, that I could buy a property, put tenants in it, and then just get cash flow. So the first property I bought, it was listed on MLS for $65,000. I believe I paid about $25,000 for it, put another 10. It was all in for no more than $35,000. And I rented both the units for about $1,300 a month. Still own that property. And once I bought that, I'm like, oh, this is amazing. Just like I could put tenants in the property, they'll pay me, and I could just get cash flow. So I really love that idea. And then just kind of started buying more from there. But for me, it was, this was right after the downturn. So the whole idea was there were so many properties on MLS, and then the pricing just seemed ridiculous. Like I could buy a duplex for $25,000, be all in for $35,000, gets, $1,300 a month in it. It just seemed mind boggling to me that like, it just seems too good to be true. Yeah. And then I just kind of went full steam ahead with that.
So kind of take us through that trajectory. I mean, you started buying some rental properties, getting cash flow. What was the next level of expansion to your business?
After I bought my 2-unit and then the 3-unit, I decided to leave my job. I actually got another 4-unit under contract in January of 2011. And I thought, all right, I'm going to leave my job. Talked to my wife, and I sat down with her and I said, look, the opportunity that we have is The downside is I'm absolutely the stupidest person in the world and I have no idea what I'm doing and I'm going to lose everything that we're investing in it. But our downside is capped at whatever we're investing. But the upside is if I hope, how it's going to go. If it goes half as well as how I'm hoping it will go, then the upside is, exponential. So just the cost benefit analysis made sense. So I decided to leave my job in March of 2011 and they just went full steam ahead. My wife and had some money saved up, so invested in more rental properties. But after like the third one, I ran out of cash. So I started borrowing money from friends and family. I was very intentional about taking the 7-year amortization, 2-year balloon payment, just so that I was forced to pay these properties down. So I didn't get into the habit of using this cash flow for my lifestyle. So all the money that I was making from cash flow, I was paying down these properties. And then after that, in end of 2011 or early 2012, I started working with an Australian marketing company that was selling properties to overseas investors. This was back in the day, Australian dollar was very strong against US dollar. So I started working with them. They were helping Australian investors buy properties. So the profit that I was making working with that Australian company, I was paying down the debt that I had or buying more rental properties for myself. And that lasted about until 2014, 15. It was like they were buying hundreds of properties a year, like lots and lots of properties. And then after that, as the Australian dollar or the US dollar became stronger against Australian dollar, then that slowed down. And then I started flipping for myself about 40, 50 flips a year.
Were you doing fix and flips for the Australian investors?
It was not necessary. I mean, I guess technically you can call it fix and flip. So this Australian company was a marketing company. They had clients all over Australia. So I would help them buy a property, manage the contractors, and then they would sell to their Australian clients.
Obviously, you're building and building on your business model there. And a lot of it that was creating that success for you was this influx of Australian money that was looking at the properties you had. Where exactly were you investing in doing this?
Northwest Indiana, only in that. I mean, I did help them buy some properties in Phoenix and then a couple of properties in Kansas, but 95% of what we did was in Northwest Indiana.
Interesting that they were coming to that market, the Northwest Indiana, the Midwest market, and not like Texas, because that's where a lot of the money was going at that time.
They did. I mean, they were investing heavily in Phoenix market. I personally knew through a friend of mine, the CFO of the company. So I think that influenced their decision in investing in Northwest Indiana.
So then it sounds like you started doing your own fix and flip. So that now you're going in a kind of a new direction. Talk about that and how that worked out for you.
That was an interesting change. It was not by design. So as we were buying properties, this one title company, so all the deals we were doing with this one title company. So the escrow officer at this title company put me in touch with a local bank, and they had 40, 50 properties that they were liquidating. And the deal was you either had to buy all of them or none of them. There was about 15, 20 that, I really liked. I could keep them in my portfolio. And then a couple of them were flips, which I had not done like a traditional flip, so to speak. Even after doing like hundreds of deals, I had not done like a traditional flip that you put on MLS. So, but the deal was you buy all of them. So I talked to my agent. He was interested in buying some properties that I did not want. We found other investors for the other properties. So I ended up buying this package. And then out of those, 2 properties would not have made sense as a turnkey properties or rental, which is what I was doing. So we had to flip them. And that's kind of how I was forced into flipping. And after we made deals, money on those 2 deals, even after a lot of things going wrong, I'm like, oh, this is actually pretty good. You could get this influx of, capital come in 3 to 6 months after you sell a property. So I did that, use that money to pay down the debt that I have or buy more rental properties.
What was the mix then between the fix and flips you were doing and then the actual rental properties you were holding on to?
Until like 2014, 15, the money that I was making from my cash flow and then the money that I was making from working with the Australian company, I was using all of that money to pay down the debt that I had on my properties and then buy more cash flow. And then after like 2015 is when I like really started flipping, like traditional flips. And that's kind of when I started more flipping. And then as the market also started going up a little bit, still had those numbers from 2010, 11 in my mind for my rental property. So it became difficult for me to pull trigger on some of these prices. In hindsight, I should have still kept buying, but I slowed down buying a little bit for myself and started more flipping your traditional flips on MLS, selling to homeowners, and also flipping to other investors across the US. They wanted to buy cash flow properties, so like your turnkey properties.
Oh, so you were providing some turnkey properties and investors.
Yeah. So then we're still flipping, but we started flipping more to turnkey owners than your traditional flips to homeowners.
It sounds like you were being very conservative with debt, where you were taking any excess cash flow or profit and really aggressively paying down debt. But then at the same time, you're flipping, which requires cash to be able to do that. So can you talk a little bit about your relationship with debt at that time? Like, why were you so aggressive in paying down debt? And then how were you also able to finance the flipping that you were doing?
So why was I so aggressive? I would say Dave Ramsey. He was a big influence on, I think, Dave Ramsey, plus the fact that this real estate market crashed happened because of people over leveraging. So I think that had a big influence on how I looked at my investing. And then for the flips, I was using private money from friends and family, short-term loan, I would pay them like 2 points and like 12% per year on the money that I was borrowing.
Would you say that mentality served you well? Do you own a number of free and clear properties today?
Yeah, I own about 50 free and clear properties. 50 free and clear units, I should say, not properties.
Just those alone, what does that mean to your bottom line?
What that means is if I decided to not do anything right now, just stopped working completely, I will still have enough money coming in to support the lifestyle that I have. It's been a total game changer.
You started doing the flipping, providing turnkey properties, but then I sense that your business took off even more from there. So kind of continue that trajectory there for us.
So 2015, I think a pivotal thing happened in my life. So I was living in Chicago until August 2015. That's why I invested in Northwest Indiana. So it was about 30, 40 minutes drive from where I was living in downtown Chicago. August 2015, my wife and I moved to San Diego area where we live right now. And I think that's where I started looking at my business and started looking at all the inefficiencies that I had in my business. And that's, started looking at, for example, if I was living in downtown Chicago, when I was living in downtown Chicago, if a contractor called me and said, hey, you have a leak going on, I would literally drive down and see, yep, there's a leak. And then say, can you give me an estimate? And then drive back. When I moved to San Diego, I couldn't do that. So I started looking at all the inefficiencies that I had. And then that's where I created REsimpli, because I realized I needed something for myself to manage all the flips that I had going on in my business. And then also started, I had hired someone to manage my properties. They did okay for a couple of years. Then the relationship didn't work out. And then I ended up starting my own property management company, primarily for my own units, but also we were selling all these turnkey properties. We ran into an issue where they would have amazing experience until we sold the property to them. But once we handed it over to an outside property management company, they would not get the same level of service that we were providing. So it was a difficult decision, but we decided, hey, let's just start our own property management company to manage my units and also the investors that we're selling properties to.
Now you're starting a business as opposed to doing the real estate and the flips and buy and holds. So what were some of the key positions you had to fill in order to have a successful business? So
I'm still, at this point, I'm still flipping after I moved to California. One thing I did was started standardizing everything for my house flipping business, because we're still flipping out 40, 50 houses a year. I started standardizing everything. So came up with all the processes. For example, if you're doing a rehab, came up with a list of SKUs for flooring, for paint, for your faucets, your light fixtures, and everything that you would need in a house, and said, okay, this is what we're going to use. We don't have to overthink it. And then once we had that, then I hired my project manager, who's still with me. I hired her in 2016. She's still with me, and she manages my business day to day. So that's, Claudia is the reason why I'm able to just spend an hour a week in my business, flipping houses. I absolutely trust her. my involvement in the business now is she tells me, hey, Sharad, this is the property we're going to buy. These are the numbers. This is how much we're going to pay for it. This is how much rehab it needs. And this is how much we'll sell for. This is how much money we'll make. She just gives me that. And I said, okay, sounds good. She has access to the bank account. I've not talked to any contractors in last 5-6 years. I don't even know their names. I don't write checks to them. I never talk to them. Nothing. She manages all of that. My involvement is just making sure my role in the business is just making sure we have enough money for the properties that we want to buy. And then, I'm signing the closing documents on the buy side and the sell. So sell side, sometimes I have my property manager so she has power of attorney to sign on my behalf on the closing documents. So she'll go sign in those. But yeah, that's pretty much my involvement. Main role for me in the business is making sure we have enough money available to buy properties.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. How do you make sure you have enough money? Are you raising money from investors or funneling your cash flow?
I have a line of credit against my rental properties. That's what I use. It's paid down right now. The flips that we have going on, I have my money invested, but as we need more money, then I use the line of credit.
If you can leverage a line of credit against your properties, that can be very powerful because then you have money whenever you need it.
Absolutely. Yeah.
Let's talk about REsimpli and the business that you started. And what is that? What is REsimpli and how did it come about?
So it came about from, if I had not moved from Chicago to California, I don't think I would have ever started REsimpli because I just would have been okay with all the inefficiencies that I had in my business. But after I moved, I looked at the systems that I needed. So there were like a couple of key requirements that I had. One, it had to have really good KPIs. Being an accountant in my past life, I wanted to make sure I was able to make decisions based on the data, not based on someone's opinion about how the business was going. Second, it had to be one system that everyone in my company could use. I didn't like the idea of, for example, using Podio and then having all these different integrations. That I just hated that idea. So that was the no-go. And then the third one, it had to be super simple to use. So I didn't find anything. So I just hired a couple of developers to create something for myself. And then I used that for about 2-3 years. And then 2019 or 20, we opened it up for other people and just kind of grew from, what it was. And then that's where I spend most of my time on. But it's basically an all-in-one software for real estate investors that are doing wholesaling or doing direct-to-seller marketing for them to manage their marketing, manage their leads, manage their disposition, and even manage their operations like buyers and bookkeeping, accounting, everything.
Sounds like a pretty powerful system, all based on your direct experience and the things that you were leveraging in your business.
It is. It started out as that. It's grown way beyond my business need. I mean, my business, we do about 25, 30 flips a year now. But some of the investors that we have using our platform are doing 25, 30 deals a month. So the needs of the system have grown way beyond what I needed for myself. But it's being driven based on the investors that are using our platform. But it started out something that I needed for myself in the business.
So do you find that you have two separate things going on right now? You've got the traditional real estate that you've been doing, which it sounds like you're only spending like maybe an hour a day at the most to stay on top of that. But then you have this new REsimpli that has a totally different function and purpose and probably different business profile than the real estate.
It does. I mean, I think that the key, if I step back, Brian, I look at, my house flipping business, my property management business, and even REsimpli or anything else that I'm doing. The biggest key for me for scaling the business has been finding the right people. Like if I look at my house flipping business, I would not be where I am without Claudia in the business. She manages everything. If I look at my property management business, I have Gabby, who's my main property manager. She gets a percentage of the profit. I would not be where I am if it were not for her. She has access to the entire bank account, everything. She has access to, I trust her. Then if I look at REsimpli, we have a pretty large team, but there are a couple of key people that I have in my team. I would not be where I am if it were not for those people. So I think the idea is one thing. I feel like my job is super simple. Like I have to just come up with the idea, but it's the people in the company that are executing. Like on REsimpli, I have Ehsan, who's the head of my marketing, Sandeep, who's the head of our dev team. If those people were not in the company, I 100% would not be where I am right now.
How did you find those people then? And how did you know that they were right for the position that you had them in?
Claudia, I found through Craigslist. Gabby was a referral. Ehsan and Sandeep, I found them from Upwork. So when I found them, I think I was a little hesitant in trusting them. So I always had, I would give them a little task and basically they had to earn their trust to the next level. So I would give them smaller tasks and see how they perform. So if they did really good, then they earned the right to the next level of trust, so to speak. So, if you imagine like you have 5 levels of trust, you're giving someone, or you're verifying everything, you're micromanaging, and then once they're like, okay, they're doing good, you give them to the next level. And then once they perform at that, you keep, bumping them up to the next level. And then, the 4 key people that I mentioned, like, Claudia, Gabby, Ehsan, and Sandeep, they're definitely all at the top level. If I was starting a new business, depending on, what industry I'm starting in, I can't imagine starting a business without these people involved.
Tell our listeners how they can find out more about you or get a hold of you. And then also feel free to plug REsimpli too a little bit more if you like.
So they can I'm not on Instagram or any social media, but I am on Facebook. I'm not very active, but I do check my messages. So they can find me on Facebook under my name, Sharad Mehta. Or if they want to email me, they can email me at sharad@resimpli.com. I'll reply to those emails. But yeah, as far as REsimpli, if you're looking for a software to manage your business, if you're doing direct to seller marketing and you're doing, more than 2-3 deals a year, I would definitely look at what we built at REsimpli. It'll make your life much, much simpler, help you make a lot more money and give you a lot more clarity in your business, from managing your marketing in your business to managing your sales, your data, and your operations. You could do all of that within REsimpli.
What is your favorite hack or app?
I own a tech company, but I use pen and a paper to note down. But if I had to say an app, I would say WhatsApp is the one that I use the most for personal and business use.
Sharad, thanks for coming on the show today and talking about just scaling from that first duplex that you purchased back in 2010 to, starting your fix and flip business and kind of a turnkey business as well, to creating REsimpli, which it sounds like a very powerful system that you have there. I really appreciate you coming on the show today. Thanks so much for being here.
Thank you, Brian, for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com.